Welcome back to Investing Talk Podcast.
Today we're looking at Co-Diagnostics. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, let's be upfront with you here. This is definitely a high-risk situation we're looking at with Co-Diagnostics. I mean, you first glance at the financials, say, as of October 2025. It looks pretty grim.
It really does. It's a classic case, really. A company that saw this huge COVID boom, right? And now they're scrambling to pivot to find their footing post-pandemic.
Yeah.
If you look at the performance numbers, their trailing 12-month revenue, the TTM, it's just cratered down to what, $1.0 million?
Wow, just $1 million?
Yeah, and that's down from $6.81 million just the year before. A massive drop.
And profitability? Well, it gets worse, doesn't it?
Oh.
I mean, they're just hemorrhaging money. TTM net loss is nearly $36 million. Think about that. For every dollar they brought in, revenue-wise, they lost about 36.
That's stark.
And the EPS, the loss per share, is minus $1.14. And Q2 was apparently so weak, management had to make some really drastic cost cuts and revise guidance down. Again.
Right. And that's the risk side of the equation. It's like walking a tightrope. But, the interesting thing is where they're standing on that tightrope, the income statement looks, frankly, terrifying.
Yeah.
But the balance sheet, that actually provides a pretty crucial buffer, maybe an undervalued one. Co-Diagnostics has, get this, no meaningful debt.
Okay, hang on. No meaningful debt. You just said $36 million in losses. And didn't they just raise capital? About $7 million?
They did, yes, in October. A direct offering.
Right. So $7 million raised versus $36 million lost. I mean, doesn't that just sound like a Band-Aid on a really serious wound? How long does that even last if the cash burn keeps up? Won't they just have to dilute shareholders again pretty soon?
That's the absolute core risk, the execution risk. You're spot on. But that $7 million raise, it was strategic. The idea is it gives them just enough operational runway.
Okay.
Enough liquidity, especially when you consider their market cap is only around $27.4 million right now. It lets them theoretically weather these losses for a bit longer while they try to execute the turnaround.
So it buys time.
Exactly. It buys time for their technology, hopefully, to start paying off. It doesn't solve the underlying problem, but it keeps them in the game.
And this, I guess, is where the whole investment story kind of flips on its head.
Precisely.
Because the market seems to be pricing in all that financial distress we just talked about. But maybe it's giving almost zero value to their actual core technology, their intellectual property.
That's the bullish case in a nutshell. It's all about the technology moat, the proprietary platform. That's the CODX PCR system. You see, most testing companies, they sell, standardized kits, kind of off-the-shelf stuff. Co-Diagnostics sells something fundamentally different. They own the underlying IP, the know-how, that lets them custom design highly sensitive, but importantly, low-cost molecular diagnostics.
So wait, they're not just selling a test kit like everyone else. They're selling the ability to engineer the right test quickly and cheaply. Is that it?
You got it. Think of it like their competitors sell clothes off the rack, standard sizes. Co-Diagnostics is more like the bespoke tailor.
Okay, custom solutions.
Custom testing solutions, and versatile too. Good for point of care, like a clinic, but also potentially for at-home use. This is potentially huge, especially in developing markets where complex, expensive lab gear just isn't practical.
And they're trying to apply this beyond COVID, right? Because that revenue obviously dried up.
Oh, absolutely. That's the whole diversification play. They're targeting some of the biggest global health challenges, things like flu, TB, hepatitis, malaria.
Big markets.
Huge markets. And they're actively developing new multiplex PCR assays. Multiplex is key here.
Meaning one test detects multiple things.
Exactly. One test, multiple pathogens at once. That moves them out of that crowded, commoditized single-test space into a more specialized niche. And that's where their low-cost design could be a massive advantage.
Okay, that helps explain something that seems, well, frankly, bizarre when you look at the analysis. Despite those dreadful financials we started with.
Yeah.
The analyst community, on average, still has a buy rating on the stock. How does that work?
Well, that's the classic speculative setup, isn't it? Analysts, they're not just looking at the last quarter's grim numbers. They're trying to look, maybe 1-2 years down the road.
Right.
They're looking at what the CODX platform could become if, and it's a big if, execution goes well. You had D. Boral Capital, for instance, just reiterate a $3 price target. That was October 28th.
$3, hold on, the stock's at 0.57 cents right now. A $3 target implies, what, over 400% upside? That sounds incredibly aggressive, even for a speculative play.
It does sound aggressive.
What kind of huge success are they baking into that model? Something the wider market is clearly just ignoring or heavily discounting right now.
Well, they're basically assuming success on two main fronts. First, getting regulatory approvals and then successfully launching those non-COVID diagnostics, especially the multiplex ones we talked about.
Okay, product success.
Right. And second, successfully breaking into new international markets, places where that low-cost platform really gives them an edge over the established, often higher-cost diagnostic players.
I see.
The current market cap, that $27.4 million, it suggests the market is giving them almost no credit for future success. It's almost priced for failure.
Meaning any positive surprise.
Could trigger a really explosive move upwards because the bar is set so low right now.
Okay, speaking of international, let's talk execution because they are making moves there. The Middle East joint venture seems important.
Yes, that's probably the most concrete recent development, something tangible that could actually lead to seeing some revenue. They finalized a deal with Arabian Eagle in Saudi Arabia to set up a joint venture called Co-Diagnostics. And the focus there is local manufacturing, R&D, distribution, basically covering the whole Middle East region from Saudi.
Setting up local manufacturing in a big, wealthy market like Saudi, that sounds like a pretty significant step. A vote of confidence, maybe?
It definitely signals commitment to a global strategy. Focusing on the Middle East and Africa makes sense. There's huge demand for accessible, quality diagnostics there. But now the investment thesis really hangs on management turning that partnership into actual, orders, and quickly.
Which brings us to timing.
Yeah.
If you're listening and this whole story sounds intriguing, what are the key upcoming events, the potential catalysts over the next, say, few months that could really make or break this?
Okay, the big one is coming up fast. Q3 2025 earnings. That's scheduled for November 13th.
A moment of truth.
Pretty much.
Yeah.
The market needs to see, first, how much of that $7 million they just raised has already been burned through. That cash burn rate is critical. And crucially, management has to give clearer visibility on new orders, on timelines for regulatory stuff, and any early results, even anecdotal, from that Saudi venture. If there's no sign of revenue coming, the stock's going to have a tough time.
And beyond earnings, for a tiny company like this, a microcap, you also have to watch those sort of structural market events, right? The things that cause volatility just because of how funds operate.
Absolutely. Index rebalancing is one. You've got the microcap ETF rebalancing, usually around December. If Co-Diagnostics gets added or dropped from key indexes or ETFs, it forces fund managers to buy or sell potentially millions of shares, regardless of fundamentals. That can cause big, sharp price swings.
Okay, so watch for that in December.
And then, maybe even more telling, are the institutional 13F filings. Those come out in January 2026, showing positions from the end of Q4.
Remind us why those 13Fs matter so much for a small stock like this.
Well, they show you what the so-called smart money is doing. Large institutions, hedge funds, big asset managers. Did they start buying Co-Diagnostics in Q4?
I see.
If you see respected funds taking significant new positions, it's like a validation stamp on the long-term story.
Yeah.
That can really attract more buyers, both retail and institutional.
Gotcha. And then there's always the rumor mill, M&A speculation.
Always with small caps, especially ones with potentially valuable tech and a low valuation. That $27.4 million market cap makes them, an inherently attractive bite-sized target.
For a bigger diagnostics company.
Exactly. Someone looking to quickly acquire cutting-edge PCR tech and maybe those international connections without spending years developing it themselves. An acquisition would obviously send the stock soaring.
Okay, let's shift gears to the price chart itself. Technical analysis time, what's the chart telling us right now? Stock's at $80.57 as we record this. That's way up from the 52-week low near 23 cents, but still a long way from the high of $1.55.
Yeah, the momentum picture is undeniably strong right now. The stock's trading above both its 50-day and its 200-day simple moving averages.
Which is generally bullish.
It's a classic technical signal, yeah. Suggests bullish sentiment has taken over and the near-term trend is up.
But There's always a but, right? Hasn't the stock run up maybe too hard, too fast recently? Is there a caution flag here?
Oh, absolutely there is. Look at the volatility. It's been extreme, almost 30% over the last 30 days. That's wild.
Wow.
And the RSI, the 14-day Relative Strength Index, it's screaming overbought. It's at 79.03.
Okay, for someone listening, what does an RSI of 79 actually mean in practical terms?
It means the buying pressure has been incredibly intense lately. So intense that the stock looks, technically speaking, stretched. It's basically screaming for a breather, a pullback, or at least some sideways consolidation.
So jumping in right this second might be risky. You can face an immediate dip.
That's the risk, yeah. It looks likely to need some consolidation before potentially moving higher.
So assuming it consolidates,
Yeah.
what's the key technical level it needs to break to unlock that next potential leg up towards those optimistic analyst targets?
The key resistance zone to watch is right around the 60 cents to $1.65. If the stock can decisively break through that level, and importantly, on good volume, volume confirmation, then the technical setup suggests it could move pretty quickly towards the 98-cent level, and maybe even push towards $1.20 if short sellers get squeezed.
Okay, so wrapping this all up for you, the listener, trying to decide about Co-Diagnostics, it really feels like a company walking this incredibly fine line.
A real tightrope walk.
You've got this potentially game-changing proprietary technology on one side, offering a path forward. But on the other side, you have these, frankly, unsustainable financial losses, creating this constant risk of, well, falling off the rope.
Yeah, the core risk just boils down to execution. Can they execute? And can they do it before the cash runs out again? That revenue has to accelerate.
And don't forget regulatory risk. Getting new diagnostic tests approved is always a slow, uncertain process that can drag things out, burn more cash.
Always a factor in this industry. Approvals are never guaranteed, and timelines can slip easily.
So considering all that, the huge risk, but also that compelling, maybe even explosive potential upside.
Yeah.
What's the final verdict here? What's the investment profile?
Look, this has to be classified as purely speculative. It's high risk, high reward. We'd assign it an overall bullish rating, maybe a 7.5 out of 10, but with that heavy emphasis on the elevated risk.
Okay.
In terms of timing, the best way to play this might be short term, maybe 1 to 3 months, trying to capture volatility around those catalysts we discussed, Q3 earnings, the index rebalancing, the 13Fs.
Right, trading the events.
Exactly. But holding this long term, that's really only suitable if you have a very high tolerance for risk and you genuinely believe management can execute on that global vision for the CODX platform over the next, say, 2 or 3 years.
So it really boils down to this. The near-term future for Co-Diagnostics hinges entirely on whether they can turn that recent $7 million cash boost in that Saudi partnership into actual tangible revenue growth.
Yeah.
Starting next quarter.
The market's watching closely for that first real sign of a turnaround. If they disappoint on November 13th, that tightrope could definitely snap. But if they deliver some positive news, maybe that 400% upside target starts to look just a little less crazy.